Good morning and welcome to this Wednesday, May 26th, 2021 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, it looks like the market should get off to a pretty good start again this morning. We do have futures up, at least at last check, they were up. But I will double check that for you and just give you a quick idea. Sometimes I go into the stock chart symbol summary and pull up the DIA and the SPY and the QQQ to get the latest trading pre-market. When I do that this morning, the diamonds right now up about 0.17%. The spider up, get that for you 1 second. Spider's up about 1/4%. And then the QQQ, which is trying to show a little leadership this morning, up about 0.34%, so a little over 1/3 of 1%. So it does look like we're going to get off to a pretty decent start again this morning. We'll see whether or not we can hold it. Yesterday, we got off to a pretty good start, but we did see selling throughout the day. So, we are moving into today actually begins a historical bullish period over the next 10 days or so. I'll give you some numbers on that in just a bit. But it looks like we're going to at least get off to a pretty good start, and then we'll see whether or not we can hold on to it. Before we get into yesterday's action, let me take those of you who are new to the show and to Earnings Beats over to the Earnings Beats website. We do have a free Earnings Beats Digest newsletter. I'd love to have you join. Simply type in your name, email address, click that subscribe button. No credit card required. You can unsubscribe at any time. It's published 3 times a week, Mondays, Wednesdays, and Fridays before the market opens. Love to have you join. I think it's very educational. That's kind of the slant that I try to put on it. And I think there's some solid trading opportunities from time to time as well. Moving on to the action from Tuesday, the Dow Jones Industrial Average finished down 81.5 points. The S&P down about 9 points. NASDAQ down 4. Mid caps down 19. Small caps down 15. So on a relative basis, small caps were your bigger loser on the day. But all of them were up earlier in the session and came down and closed down on lows. And I think this is just more of this sideways consolidation that we're seeing right now. So we moved up through the moving averages. You can see that on all of the major indices except for the mid caps. And yet we turned right back around on both mid caps and small caps and moved back below the moving averages and threatened it on the other 3. So it's just a period that we're going to have to go through. Probably going to be a little bit of frustration. You're going to see rotation back and forth between various areas with nothing really leading. And as a result, the market's not really going anywhere. As I mentioned, we do have an upcoming bullish period that starts today. Maybe that will get things started. But as of right now, we are still in consolidation mode. Discretionary stocks leading from a sector perspective, up about 1/3 of 1% yesterday. Real estate up almost 0.3 of 1%. Those were your 2 big leaders. To the downside, energy, which had been leading heading into May and throughout the first couple of weeks of May, pulled back. I think some of this had to do with options expiration last week, continuing to be weak. We always talk about, options expiration. If you've been strong heading into options expiration, and there are a number of options that are traded on that particular ETF or stock or whatever you're looking at, sometimes you can see weakness not only into options expiration, but also into the week following. And I get a lot of questions about that. Why would the week after options expiration matter? And if you think about it, or if you understand how options work, if you have a strike price and you've got a call above that strike price on option expiration Friday, you can exercise that option. So you go long the stock. And if you do that, market makers are still on the other side of that trade as you go into the following week. So many times market makers still have incentive to take prices lower in the following week among those stocks that could be impacted by options. Now, it certainly doesn't work across the board. And I try to use it as a directional clue. I don't try to say, okay, this stock is going to go down for the next 5 days, or this stock is going to go down to this dollar point. I just look at it and say, okay, I'm expecting that this price is probably, at least in the short term, going to go lower. And that's all I'm looking for. It could happen for a day, maybe even a couple hours, or it could happen for 5 days. It really varies, but it's just one other indicator that we like to look at. So when I'm looking at energy and I'm seeing energy down on Tuesday following option expiration, I know how strong this group was heading into option expiration week. That just tells me, hey, maybe this still has something to do with options. Utilities, not so much with options. I don't know too many folks that trade options on utilities. But sideways consolidation continues. This group's fine from a technical perspective. It's just not, in my opinion, going to be a leader. Financials, on the other hand, I do expect to see continuing leadership. Watch the 10-year Treasury yield on this group. But just continuing to consolidate. We almost had a breakout. Moved back up above 38 yesterday, which was right at breakout level. But we chose to come back down one more time. I still like the pattern here. I think we'll see financials breaking out. The 10-year Treasury yield, not much of anything out in terms of economic news. We always have the oil inventory come out on Wednesdays, but I usually don't pay too close attention to that. Although if you're trading a lot of energy, you probably should. But there really isn't a whole lot coming out today. 10-year Treasury yield, let me get an update, make sure we got the latest here. Currently, it is, well, slightly higher. It's at 1.57%, still sideways consolidating. As long as this continues between this range of 150, 175, you're probably going to see the financials and the industrials pull back. That's what we've been seeing on a relative basis. But as this 10-year Treasury yield moves higher, which I believe it most likely will, then I think you're going to see renewed relative strength in financials and industrials. So I would consider this like momentum sleepers. Financials, industrials, they had the momentum. Now they're just kind of relaxing and pausing for a little bit. A lot of folks, traders, will forget about them if they don't perform well for a period of time, because traders are looking for that immediate return. And so when a group like this falters on a relative basis, a lot of times you'll see a group of market participants shying away from the group. All right. As far as the market goes today, some of the things I'm looking at, gold, I guess it's worth mentioning. Gold this morning is up, last time I looked, about $6 an ounce, which took it above 1900. Haven't seen that since we fell apart back at the beginning of the year. So nice steady move up in gold. Short term, I think gold's fine to trade. Longer term, I'd still be a little cautious. I've been talking about the dollar and how I expect the dollar to be stronger in 2021. Well, it was through the end of March. The last 2 months, we've seen it moving lower again. I believe we're probably going to put a double bottom in, but I want to pull up a long-term chart just so you see that this low over here went down to about 88. This was 3 years ago, back at the beginning of 2018. So we were down close to the 88 level. Right now we're at 89.63. And I just want to point this out, because if we do lose this low, there will be a lot of folks looking at a 1-year chart. They're seeing a breakdown in the dollar and use that as a reason to jump into gold. I think the bigger level to really watch on the dollar is this 2018 low. Because if you notice, this 2018 low also is right at about this double top from 2009, 2010, right near 88, 88 and a half, 89, same thing on the way down. And here we are back in this range again. So if we break below the January low, I wouldn't necessarily write off the dollar at that point. I would be much more concerned about the dollar, however, if we break below that 88 area. So if you're following gold, or if you're trading gold, keep an eye on the dollar. A breakdown below 88 would really, really help your position. If we begin to bounce off of that and start to strengthen again, and especially if we go back through that end of March high on that 1-year chart, let me pull that back up again. Right here, if we were to strengthen and get back up through that level, I do not believe I would want to be in gold, energy, or any of the materials. I think the material stocks in general would probably begin to underperform. So I think the dollar is an area we want to keep a close eye on. All right. Also yesterday, airlines got off to a good start. They didn't finish so strong, but that was kind of the theme of the market. It did still finish up 0.4%, so outperformed the market. But you can see airlines trying to break out above the high from just a week earlier and then go back up and challenge that double top. I think you can see uptrend, sideways consolidation, 220, great support, 250, maybe 253, 254 is your solid resistance area. And we're sitting almost right in the middle of this range right now on airlines. So we're free to move in either direction. I think it was UAL came out with some pretty good news this morning comparing. I didn't see the comps, what they were comparing. They just, I saw that they had indicated it was higher than the 2019 level. So we might get a little bit more of a pop here in the airlines today. A close over about 242 would be short-term bullish for airlines. And then some of the cruise lines also did pretty well yesterday. So these were two groups that were hit the hardest by the pandemic. But if you look at Norwegian Cruise Lines here, nice day yesterday, up more than 3.5%, sideways consolidation. Very similar to what we're looking at on the airlines. Watch these recent lows. So on this particular stock, I'm going to say 24, 25 key support, and then up just above 34 is your key resistance. Maybe a little bit of resistance right here. 3 tops at about 32. So we got to try actually 4 tops yesterday, high of 31.95. So if we get through 32, I think we have a pretty good chance of sustaining that move to the upside to 34. All right, don't know if you noticed it, but GME is back. GameStop, nice move yesterday, breaking back out above all this consolidation. Look at the volume picking up. And then I noticed this morning when I pulled up the pre-market, up another 12% on the open, $25. So really strong action here on GME again, beginning to take off. And then the other one is AMC. So AMC I talked about last week with options expiring, hitting that double top. And I've also talked about how options expiration can be just a temporary thing, that if you're in a stock long-term and you're looking at a company that's pulling back due to options expiration, it's a short-term market inefficiency. Those in the long term, it's just a blip. Don't worry about it. Whatever if you're in for the long term, don't worry about short-term options expiration. Well, AMC was like the poster child of this from last week. So options were expiring. A lot of money was on the table for market makers. I think I had calculated max pain to be like 1132, I believe. And we had closed up and actually touched about the 1450, 1460 level on Tuesday, 3 days before options expired. Look what happened to AMC. Saved the market makers a ton of money. And then all of a sudden now, look at the volume picking up, and now it's resumed that move to the upside. Very, very strong action and a great breakout there on AMC. Now back to the downside on AMC. This is going to be a volatile stock, so I would not trade it unless you have a strong stomach. I think you're going to see some price support at about 14.5 on a pullback. But if it does pull back, things get violent, don't be shocked to see it all the way back down to the 20-day. On the flip side, the bullish side, we could easily get back to 20, a little over 20, which is where we were in January when we had all those short squeezes going. So AMC looking much, much better here. All right, I'm going to try to do something very quickly. I've done this before. I got a lot of positive feedback from it, so I'm going to do it again. I'm going to try to do the Dow Jones 30 stocks in about 10 minutes. Go through them really quickly. So these are 10-year weekly charts on these stocks. The Dow, it's an index of 30 conglomerates. Trying to trade these off of a one-day, intraday chart or something, I don't think that's very useful. I like to look at these stocks longer term just to see, are they bullish? Are they bearish? You think about Apple, and Apple's been doing nothing this year. Look at the long-term chart. What's wrong with this chart? Nothing. I think Apple is very bullish. It's just simply, it goes through periods where it makes huge run-ups and then it consolidates. That's been its history. So it made a huge run-up and it's consolidating. I see nothing wrong with Apple. Amgen can be somewhat volatile, and it has been this year. It's been a slower mover, obviously, than Apple over the years, but I think the uptrend remains in play. I like Amgen. I think it goes higher. American Express broke out recently, and this one was hit hard during the pandemic. I think American Express looks good. Probably getting ahead of itself right now. I don't know. It'll probably have a catch up pullback later in the year, but I do like the stock. I think it goes higher. Boeing, I think Boeing is now set to make another run. I was a little worried about it back in the beginning of the year when it made this breakout. And I remember talking about this and looking at these prior breakdowns from about the 290, right around 285, 290. And I thought, okay, Boeing might make a run there. I would be careful there. Well, we made a run up to about 280 and then pulled back, hit that 20 week, and now turning back up. I think Boeing looks strong. And I think you can keep your stop fairly tight there. Caterpillar, what's to say here? Beautiful move up, nice uptrend, looks strong, looks bullish. Salesforce.com made the big breakout back in the middle of 2020. I think that may have been when the news came out that it was being added to the Dow right around that time. It's pulled back, but it made a huge run. I mean, this stock went from under 120 to above 280 in the course of about 6 months. So it's pulled back, but it's still fine. I think as long as it holds 200, I'm fine with Salesforce. Cisco Systems, I think we got a nice big cup. So you got a huge long-term uptrend, very nice cup. I'd be looking maybe for a little pullback. Actually, we got it last week back to about 50. I think that 48 to 50 area should be pretty solid, and I expect a breakout later this year on Cisco. Chevron, look at all the tops coming across here. So I think we're running up against some pretty key resistance between 110 and 115. So this is one short term that I'd be interested in taking profits on, moving elsewhere until we get this breakout above 115. Then I'd be back in on Chevron. Disney, nice breakout back in the latter part of 2020, taking out the 2019 high. We've pulled back. This one, another one that's been frustrating in the short term. But when I pull up the long-term chart, I like Disney. So I'd be using this pullback. Anything back down close to 160, I think would be a great entry for the long term. Dow Holdings been very strong of late. 2021's been kind. Stock continues to trend higher. Looks bullish. Goldman Sachs in that financial space, multiple years of sideways consolidation. I think we're on multiple year run to the upside. So Goldman Sachs, that doesn't mean it's not going to pull back. And it can get frustrating on the daily chart because you can see a pullback for a month or two and it gets you very frustrated. But just remind yourself of the big picture. Goldman Sachs, big breakout over 250. Not one of my favorite companies, I'll be honest. But the chart, I think, looks really good. Home Depot, big breakout earlier this year. Pulling back now. I think that rising 20-week moving average is an opportunity. Honeywell, nice breakout. Like Salesforce added to the Dow last year, continuing to move to the upside. I think this one looks fine. IBM is really strengthened. This is one that on the short-term chart looks good, and on the long-term chart, you're like, might be time to sell. Lots of tops on the stock between 145 and 155, dating back the last 10 years. I mean, anytime we've gotten up to 145 to 155, it has been a big sell signal. So I've got to continue to honor that until IBM can show me a sustained breakout above that 155 area. Intel's got a great long-term record. It's been struggling the last couple of years, hasn't really participated in this big bull run. So that has me a little concerned. This is another one that probably is just more like a hold for me until I can see something more significant, either continued weakness down closer to 45, 43, which I think has been a great support area, or let's get a sustained breakout above that 68 level. Johnson & Johnson continues to move higher. It's a slower mover. It's defensive, but it's a winner. Continues to move higher. I like it. JP Morgan, one of your better banks out there, large bank, broke out earlier this year. Once that vaccine news came out and interest rates started moving up in anticipation for the reopening of our economy, JP Morgan has benefited. I think that continues. I like the stock. Coca-Cola, after topping back in 2020, early part of 2020, took a big hit during the pandemic, is now in an uptrend, but I think still on a relative basis, not performing as well as some of the others. I view this one as a hold at this point as well. Let's see if we can get through that 57.5, 58 area. McDonald's did make the breakout recently. I like McDonald's. I think as the economy reopens, this is a stock that should continue to benefit. So I would be fine with this one. I think the long-term chart there looks great. 3M strengthening. I think as long as we continue in this uptrend up to about that 230 level, I'm good with it. Closer to 230, I would be a seller. And then let's see if we can get the breakout. Merck, big move all the way to the end of 2019. Now we're sideways consolidating. For the long term, I think this is a solid company, nice dividend, but it's not going to be a great growth stock. So if you're looking for growth, there's plenty of others that I'd pick well ahead of Merck. But combination, safety, dividend, that sort of thing, I think Merck's still very playable. Microsoft, beautiful chart. Need to say nothing else. Great company. It's a buy and hold. Nike, I think same thing. Really nice move to the upside. It's pulled back over the last 4 or 5 months. Honestly, I think that's a long-term opportunity on the long side. Procter & Gamble made a recent breakout, kind of like Johnson & Johnson, defensive in nature, has pulled back now trying to get through this prior high. I'd probably be a seller. I think I like some of the other stocks in this, in the Dow better, but I do think Procter & Gamble remains strong longer term. Travelers, I like this breakout recently. It's pulled back the last couple of weeks. I think that's an opportunity. I see Travelers going higher. United Health continues to power forward. It's in that healthcare area, obviously, but outside of that pandemic, when it had the pullback, I mean, you can see this has been a very, very steady performer. Maybe the only one steadier has been Microsoft. It's been a really good ride in United Health. Visa, another pretty steady performer, continues to trend higher. Nothing to worry about there. Verizon, a little more defensive. Telecom, sideways consolidation. To me, it's more of a hold. I think this one also has pretty nice dividend. So it's kind of in that Merck category where, you're probably not going to see it just take off and make you 20 or 30% anytime soon, but it'll pay you a nice dividend, provide you a little bit more safety to the downside in the event the market, were to fall back, which I'm not really looking for. But again, for somebody maybe who's more income oriented, little older, wants to make sure that you're holding on to your portfolio, I think Verizon would be a pretty nice bet there. Walgreens Boots Alliance now has started strengthening. I'm okay with this stock because I do think it's got a lot of room to get back up to its prior highs, 80 to 85. We're sitting at 54. Just watch that rising 20-week EMA. That's what I would do. Last one, I believe, is Walmart. Continues to be a strong performer, really since the bottom in 2015, just continuing to go higher. Really didn't get hit very hard back during the pandemic. This was one of those stocks I thought that was being heavily accumulated, continued to trade well throughout the balance of the year, and then took a hit with reopening. But I think the stock remains strong, and I'd be fine owning it. And that's it. I did it in 10 minutes, 30 of them. Let's move on to the earnings. Agilent reported earnings yesterday after the bell, and the stock, or the company posted earnings of 97 cents versus 82 cents, and the stock is up 4% in pre-market. At least that was the last I saw. Let's pull it up and see. 2%, 2.6%. So it does look like it's going to make a run for its recent high, but it does look like at this point it's probably going to open under that key level. I think if it were to open over about 137.50, that would be pretty bullish. Well, it's bullish even at 136.73. I just don't. It's going to be a little tougher to break out if it opens below that resistance. So that's what I'd be watching there. One company got a great reaction, and maybe some of these software companies are going to make a turn. Zscaler up almost 11%. It's been really hit. This is one of those stocks within the growth area that's been hit really hard. It's going to open up to about here. It's got this double top at 200 to really get things going. I think it's got to get through there because we got maybe kind of close to a double bottom here, which means this top is very important. So watch 200 on Zscaler. Toll Brothers in that home building area, up 2% on its earnings. By the way, Zscaler reported 15 cents versus 7 cents. Toll Brothers reported $1.01 versus 80 cents. So an easy beat there. This could be a little cup off of an uptrend. Looks like we got this rounded bottom. We're going to get a nice gap up. Maybe look for Toll Brothers to continue trending above its 20-day and move back toward that 68 area. The worst reaction to earnings, and I saw probably about 15 companies this morning that I was looking at, and Nordstrom's down 6.8%, $34. So it's all the way down here at this low. This is a pretty important low where it's opening. So maybe it gets this big hollow candle and gaps down and comes roaring back. But I think whatever happens after the open today is going to be really important on this chart. So JWN, they were expected to lose 53 cents. They lost 64 cents. And I think their guidance was a little lower than expected. So that combination, not good there. In the renewable space, Renesola, SOL, up 4.6%. You can see many of these renewable energy stocks have been downtrending for quite some time. This one's going to try to get back through its 20-day moving average. We'll see if it can do it today. Reporting this morning, PDD, which is Pinduoduo, up 5%, trying to get through its 50-day. It's going to gap up above it at the open. We'll see whether or not we hold, but really nice reaction to earnings. Expected to lose 68 cents, lost 36. So better than expected earnings. Capri, this was a portfolio stock we had last quarter. Came out with really nice numbers. The expectation was for a loss of 1 cent. They actually had a profit, 38 cents. So stock up 2% to $54. And I think off of this uptrend, we're just sideways consolidating. I would want to continue to hold 52. If we don't hold 52, there's a chance this stock goes back down to 46. Because as you go up, you get higher highs, higher lows, higher high. You don't want to go below this low. So that to me is the most important low on the chart. Dick's, this has been a heavily shorted stock, and the shorts are going to be in some pain this morning. Dick's was expected to report $1.04. They reported $3.79. Stock up 9.4%, and it looks like it's going to be a breakout on the open. So you could see more shorts scrambling today on Dick's. And then the last one I have for you is A&F. This is Abercrombie and Fitch, up about 7.75%. So you see a lot of these companies getting positive responses to really good, solid reports. A&F was expected to lose 39 cents. They posted a profit of 67 cents. So reaction is positive, going to open about 41 in this range between about 37 and 44. It's almost right in the middle of the range. Let's see where it goes from there. But no doubt, really solid earnings from Abercrombie. All right, let's move on to the three you must see, and then we'll wrap up. First up is HollyFrontier. I think yesterday over at Stock Charts TV, I featured three companies that were, potentially breaking out, were strong. So I thought I'd pull up three companies that are struggling today. Give you my take on these charts. First up with HollyFrontier. I think you can see this top negative divergence. Now, negative divergence can mean a couple of things. Number one, what I look for is a short-term pause. That's just telling me that momentum is slowing in the near term. It doesn't mean that a bear market's coming for the stock. It could be, but it's way too early. You can't make that call. You just have to see what happens. But what I would expect is a trip to the 50-day. See how the 20-day was mostly holding here on the way up? Get a negative divergence. I start thinking 50-day. Reset that PPO at the center line and then go from there. Well, what we've been doing is sideways consolidating. So I'm not really writing it off, even though we're below the moving averages. We broke out above about $31, $32. Well, yesterday, volume started to pick up a little bit, and that was the lowest close we've seen since back in February. So HFC is one that is teetering on breaking down. I wouldn't exactly call it a breakdown yet, but if I was looking to go long, or if I was long, I would want to see a reversing candlestick, and soon. I don't want to go down below 31, that's for sure. And we're at 32.94. So if we do see some short-term weakness, let's see if we get a move back to the upside. Next up, Micron. I don't know what happened to Micron, but all of a sudden, if I pull up the relative chart, it's just kind of lost its mojo. The semiconductors are rebounding, and we're slightly rebounding on Micron, but look at the relative weakness just continuing here. Volume trends all of a sudden turning negative. And yesterday was an up day for semiconductors, and Micron prints a bearish engulfing candle at the 20-day, the descending 20-day. Not good action here on Micron. So I've grown much more cautious here on the stock of late. And then finally, Brinks. Yesterday went down, you can see 2.7%. We got all these bottoms right here at about 75. You can see these tops coming across at 75. I think this is a major point area, pivot area for Brinks. So I'd like to either see a reversing candle, which would be bullish, or if we continue lower, I think 67 could be in the cards for Brinks. All right, that's it. Market just opened. So let's just go over here and see how we open this morning. Right now, we got the NASDAQ up 40, S&P up 6, and the Dow up 67. So you can see the NASDAQ leading on a relative basis, a little bit more relative leadership and strength in small caps and mid caps so far today. VIX down 1.5%. All right, that's it for me. I'll be back tomorrow over at Stock Charts TV for your next Trading Places Live. It'll start at 9 a.m. Hope to see you over there. Just go to stockcharts.com and click on the Stock Charts TV link at the top of their website. All right, that's it. Have a great day, everybody, and happy trading.